Hello and welcome. You're watching First Take here on News 9, where we bring to you the morning action on Dalal Street. I'm Suyash Maheshwari, and with me in the studio is Amit Ranjan. And it's a Thursday morning and a foggy one at that here in Noida. But the market, Amit, they seem to have found some clarity with bulls charging onwards and upwards. And the global cues are also looking quite supportive, isn't it?
Yes. Uh, S&P 500 closed at a fresh high ahead of the Fed meeting. The S&P 500 closed at 0.76%, was 0.76% up. All three major US stock indexes advanced on Monday. The Dow Jones closed in the positive at 0.59%, and the Nasdaq closed in the positive by as much as 1.12%. Going to the European markets, those were also in the positive, and they closed in the positive at 0.21%. Coming to the Asian markets, that's where we see a decline for a third straight day, underscoring the need for policymakers to take more steps to revive investor confidence. Hang Seng today is down 1.95% as we speak, and Nikkei, although, is up marginally at 0.24%.
All right, and oil prices that which they were a concern yesterday, they have eased by about $2 since yesterday, and this is on the back of China's ailing property sector, which has sparked demand worries, causing traders to reassess the supply risk premium from escalating tensions in the Middle East. Brent crude, as we speak, is hovering around the $82 a barrel mark. Yesterday, it had moved past $84. Now, the dollar index is, trading in a close range against its major peers as traders await the Federal Reserve's monetary policy decision, which comes out on Wednesday, for clues on when the US central bank might cut rates. The 10-year yields, however, they have slipped and they ended somewhere around the 4.08% mark on Monday. And since last week they have corrected by about 10 BPS now, but still holding above that 4% mark. Back home, another strong start for the Indian markets. We have in fact opened with above the 21,750 mark on Nifty, but markets have paired some of those early morning gains, and it's currently flat. Nifty, as we speak, is trading with a flattish bias, just trading under the 21,750 mark. Sensex is also trading on a flattish note. The mid cap and the small cap indices, they are trading in the green. The mid cap index is up about 0.2%, and the small cap index, that is trading up about 0.5% or so, and in fact it has scaled a new record high this morning. We are above the 15,700 mark on the small cap index. The previous lifetime high was somewhere around the 15,680 mark. So that's good news for the market. And there were some concerns about this volatility that we are seeing and the correction that we are seeing to take impact on the broader markets, because as we know, it's a broader market that sees a correction first once the market actually starts falling. But to understand what's going on with our markets and the global markets as well, let's also bring on board Mr. Amar Deo Singh, Senior Vice President of Research at Angel One. Thank you for joining us here on First Take, Amar. What's your overall assessment of the market? The short term, is the view bullish once again in the short term, or is it still a sell on rise sort of a market?
Yeah, I would say that if you look at the markets, Indian markets are clearly indicating that there's a lot of support for the markets at lower levels. That is something which is coming out very clear, despite the fact that we saw a significant correction, almost 15-16% in the most heavyweight of all counters, that is HDFC Bank, and which has close to 13.5% weightage. So despite that, the markets have bounced back, and yesterday it was Reliance up by almost 7%. So that tells me that overall markets are being supported, and also global cues have also been positive. You talked about crude oil prices moving up slightly. So that's within, I would say, comfortable zone, anywhere between 75 and 90. That's a zone which the markets are also comfortable with. So I don't see much on that side. But yes, what we are seeing is that a lot of heavyweights are getting into action. We are seeing earlier it was HDFC Bank, now we are seeing Reliance, and also markets are awaiting the budget. How much actually the budget delivers is something we'll have to watch out for, because it being an interim budget, but still expectations and hopes are always there from the budget. And if you look at the broader market, which you talked about, yeah, across the board, be it the small caps, the mid caps, the large caps, we've seen some sort of resilience there, as well as pockets of very upside, positive upside move. And also there, what we are seeing is that PSU, public sector undertakings have been performing exceedingly well, be it public sector banks, be it the railways, be it the defense. So they have also been contributing significantly.
All right, and India VIX, now that has, the index has climbed above 16 levels today, and we are at a, at a 1 year high as far as the volatility index is concerned. Is that a concern for the markets?
So
Amar?
if I look at India VIX, so India VIX, see, I wouldn't say because ahead of budget we definitely see a rise in VIX, because markets during this period, pre-budget and slightly post-budget, we see a lot of volatility. So I think this is along expected lines. Had the budget not been there and we would have seen a spike in India VIX, then it could have led us to believe that maybe there could be further correction or uncertainty in the markets or something of that sort. But this is along expected lines. The key question is that how long does, because if we go back and see, so just to give you a perspective, so if I look at India VIX in the month of March made a high of 17.36. If I go back slightly, in February, it had made a high of 19.39. Currently, it's around 16.5. So somewhere around 17, and we'll see higher VIX also. There's no doubt about it. We will see the spike there as well. So this is expected. I don't read much into it, because markets are anticipating that there'd be increased volatility. That's the reason we are seeing a rise in VIX. Otherwise, there's not much to worry as of now.
All right, and it makes sense that the volatility is elevated considering such a data heavy week we have in front of us. Of course, there is the interim budget, but we also have US Fed's policy decision that comes out tomorrow on Wednesday. And of course, we are in the midst of the earnings season, and today we have a big one in L&T. I'll come to you in just a bit, Amar, but Amit over here has the street's word on what to expect from L&T. Amit.
Okay, thank you, Suresh. The street expects a sizable rise in profits when it comes to L&T, almost as much as over 33%, as much as 33.7% rise in net profit. Revenue is expected to jump 20%. EBITDA is likely to be subdued and actually would go down around 11.3%. EBITDA margins also will be going down around 330 business points. Now, the rise is basically on the back of strong order inflows and project executions. When we look at the stock, Amar, the stock has given a rise of almost 75% over the last 1 year. It is close to its all-time high of 3733 at 3,700. How do you advise investors to approach L&T right now?
So if you look at L&T, definitely the stock, see it on the long-term charts or even on the short-term charts, intermediate-term trend, I would say the trend is very strong. So effectively, it means is that there's no sign of trend change either on the long-term or the intermediate-term trend, and the momentum is there. However, what we are seeing on the daily charts, that is the short-term charts, we are seeing some sort of consolidation. It's like more or less the momentum has been declining. And also some of the technical indicators are clearly pointing towards extremely overheated territory in L&T. So effectively, it means is that upside now could be capped for some time. So it definitely makes sense for those who are long and holding positions. They can look at booking profits. If they don't want to book profits, they want to trail their profits, then the stop loss needs to be below the 3,300 mark, because it's almost 400 points from the current levels. But that's the next, I would say, swing bottom. So short-term swing bottom. So if a stop has to be placed, it has to be placed below 3,300 levels. Otherwise, this could be a level to at least book part profit in L&T. The long-term trend, there's no change in trend, or there's no change in the intermediate term trend as well, and that continues to be extremely strong. So effectively, it also means one more thing is that any significant correction in the stock should be used as a buying opportunity.
All right, and before we let you go, Amar, considering the current market volatility and the temptation to enter this, before the budget, what are the key do's and don'ts that a trader should keep in mind on the budget day?
Yeah, I would say one thing you definitely need to keep a watch out on the budget day, that you can be right and you can still lose money on the budget day, because the market is going to be extremely volatile and the stops getting triggered would be quite high, because the possibility of the stops getting triggered, because markets will move both ways. So best is that you wait out for the budget, then you'll get some very good moves. Rather, if you are preempting and taking a position and the market moves both ways, the chances or probability of stops getting triggered would be higher, as compared to once the budget is over, the market to a certain extent has digested, maybe 10, 15, 20 minutes post that, you might get some very good trades in the index or maybe in specific stocks. So that would be a more appropriate way of looking at it, unless you have some option strategies which you plan to implement during the budget day.
All right, that's a view coming in from Mr. Amar Deo Singh. Sir, always great insights from you. Thank you for joining us here on News 9.
Thank you.
But with that, let's take a short commercial break and we'll be right back with Mr. Kush Bora of kushbora.com on the other side. Welcome back. You're watching First Stick here on News 9, and the markets have paired some of the early morning gains, and currently we are trading on a flattish note. Nifty, as we speak, has slipped below the 21,750 mark. It's very close to its day's low, and but we are still holding above the 21,700 mark. Sensex, on the other hand, has also corrected from the day's high. It has slipped past the 72,000 levels. It opened above it, and currently it's trading at 71,818 levels, just about 50 points off the day's low. The mid cap and the small cap indices, the broader markets in general, are holding on to the early morning gains. The mid cap 100 index, as we speak, is up 0.2%. It has moved above the 48,000 levels, and the small cap index, remember, that had touched a record high, a new record high in the opening trade today. It's trading above the 15,700 levels, up 0.6% as of 10 a.m. this morning. Volatility remains a concern, and India VIX as of 10 a.m. was up 5%, and it's above that 16 levels. In fact, it's moving towards that 16.5 levels, which is the highest level for India VIX since March of 2023. But to understand what's going on with the market, the cause of concern and the way forward, let's also bring on board Mr. Kush Bora, founder of kushbora.com. Thank you for joining us here on News 9, Kush. Nifty has pretty much retraced that 61.8% level of that entire fall from the record high of 22,124 to the recent low of about 21,137. Can this follow-on buying that we are seeing in the last couple of days take the index back to 22,000?
Hi, first up, a very good morning to you, to all the viewers, and it's a pleasure to be here as always. A simple one-word answer is yes. Look, last whole of January, when it's still not over, but every time I was on this channel, I've maintained one thing, that January is perhaps a consolidation month. It's a month where you should protect your capital, because I see a fabulous and a bumper February and March panning out, and I think we're on course for that. Even if not in the calendar month, at least in the start of the series, the Feb series, Nifty is done wonders yesterday. I think this will continue. See, it's a very difficult thing to follow up a 400 point kind of a rally, on the index. So this consolidation is very much warranted. Plus today is the Fin Nifty expiry, and then a couple of expiries going forward also, right? That said, 2100, 21,850, once that is taken out, we are looking at not only 22,000, perhaps even 22,200 as the level on Nifty. So my suggestion would be, if you're looking at a more positional kind of a trade, don't be in a hurry to book out. The best way is to keep trailing your stop losses and ride this wave.
All right, and what helped, I think, markets yesterday was also the performance of the banking pack, that has been a laggard for the longest of times. The index on the whole has retraced about 23.6% of the levels from the record high to the recent low. But we are seeing some bit of a resistance build around that 45,500, 45,600 levels, and in fact the index has turned negative this morning as well, right from those levels as we speak. So what's your view over there? Is Nifty bank out of the woods, or is 45,500, 600 the level that you are tracking?
No, I think you're spot on there when you say that, the resistance on the bank Nifty is pretty evident. I will just move the levels up. This morning in our advisory report, we've clearly mentioned that the resistance level for bank Nifty in the near term is 45,800. That's the level that we're looking at. But if you were to call the bank Nifty out of the woods, the level that I'm looking at is the 50-day moving average, which is 46,500. Now, I know it's about 1,000 to 1,200 points away, but that's the kind of move, the bank Nifty needs to make before we can even start calling that, the trend has perhaps changed, at least in the near term. Right now, the way we see it, bank Nifty, just play the range, 4,000 on the down, 44,400 on the downside and 45,800 on the upside is the range. It'll not be a bad idea to play this range, sell towards the higher end of the range and then buy again at the lower end. That's the way we're looking at it. For sure, bank Nifty is not out of the woods yet. One more reason why bank Nifty is not out of the woods, rather two reasons. One, the index itself and the HDFC Bank stock had gone into deep oversold territories and they've only seen a technical rebound, nothing more. Two, if you see the kind of shorts that were built on the bank Nifty between yesterday and today, there hasn't been a great deal of covering, and that is despite the kind of move that we saw in the index yesterday. So both the points are suggesting that even the short sellers don't yet believe that the worst is over for the bank Nifty. That said, we're looking at 45,800 as the first pit stop. And once that is taken out, 46,500. Once these levels are taken out, will we start considering any kind of long positions convincingly on the bank Nifty?
Good morning, Kush. I'll now drive your attention to the maker of Bingo chips and Gold Flake cigarettes, which posted their Q3 results recently. ITC Limited beat market expectations with almost a 10.75% rise in net profits. Revenue from operations grew only 2.23%, so they were subdued. When we look at the stock has given a gain of almost 30% over the last 1 year, and even when I look at it today it is down almost 6.68%. Now, what do you make of ITC stock right now? Good time to buy or just hold?
So, if I can counter question, what is the horizon that we're looking at? If you're looking at this from an investment perspective, see, remember, we need to make a portfolio for all seasons, isn't it? So, from an investment perspective, I think it's not a bad idea to, gradually accumulate ITC when it's on the way down. I mean, if you remember, the last time around, we were here, we've had a discussion or two about Reliance, and my view was always the same, that, a stock like Reliance, you keep accumulating, you start an SIP and you keep accumulating on dips. The view is very similar on a stock like ITC. If you need to make a portfolio for all seasons, then ITC from that perspective is, for sure a stock that you should keep adding on the downside. Now, technically, the stock is very close to its 200-day moving average. We know a slip below it could perhaps extend the fall, but 440 is a very strong support zone. So even if the 200-day moving average rather, where the stock is trading at currently is taken out, I think 440 will come in as a strong support. So from an investment perspective, for sure, keep accumulating this stock. Again, there'll be like a phase where in a quarter or two, and the stock will again rise and shoot up, and we'll consider this as a missed opportunity. And ITC was never a trader stock, right? So I don't think there is too much of a miss when it comes to the trading opportunities here.
Going by strictly the near term, do you expect it to touch its 52-week high of 499? Right now, it's at around 447 in the near term.
No, I don't. In the near term, I don't. The reason being very simple. The entire FMCG pack is under pressure. The stock has actually been seeing a selling pressure, on every rise. If you see at every, 15 to 20 points that the stock has given a jump off, the stock's actually seen what we call as a lower high kind of a formation. So from that perspective, near term, I think 480 and the 500 levels are a bit of a stretch. Hence, more of an investment bet. I don't see that stock. I don't see this stock, hitting 480 or perhaps even 500, let's say in a quarter, or maybe even, a little over that.
All right, and another company that declared its results after the market hours yesterday was Bajaj Finance. And I was looking at the numbers, they look healthy overall, a slight miss on the profitability front, but asset quality has improved, unlike in the case of other NBFCs, AU Small Finance Bank comes to mind. But the stock has taken a beating this morning, Kush. It's down somewhere around 4%. And I was reading some of the brokerage views. They are positive on the long-term prospects of the company, but what's the short-term view on Bajaj Finance? Is there more pain in the offing?
If we would have spoken before the market opened, irrespective of what the result was, my opinion would have been, and this is the benefit of hindsight, but my opinion would have been, if there is any kind of rise in the stock, go ahead and sell it. Now, let me also give a very clear disclaimer that this is one of our favorite stocks and has been for years now. But we'll have to perhaps adapt with changing times. If you look at the high that the stock made, somewhere early October last year of about 8,000, 8,200 odd, the stock's been slipping continuously, and there is a very clear shift, perhaps from Bajaj Finance, out from Bajaj Finance and perhaps, into Geo Finance. But if you just look at it independently also, I'm drawing a trend line, a downward sloping trend line. There was a brief phase of 5-7 days when the stock was up, but again, it's crashed and tumbled again. So from my perspective, I think it's a good idea to perhaps make that switch. The company keeps surprising from its business performance on the upside, but somehow it's not translating into stock price, and that's of course the proof of the pudding, right? So for me, there could be some downside. If you're looking at a fresh short selling opportunity, then I would suggest wait for the stock to perhaps bounce a little and then go ahead. But from an investment perspective, for now, I would say hold on. I mean, avoid putting in fresh money in Bajaj Finance.
All right, hold on, avoid putting fresh money in Bajaj Finance. But another stock that's doing fairly well, in fact doing brilliantly, is Reliance Industries. Now that had, the stock had one of its best days in 3 years. In fact, the best day in over 3 years since September of 2020. It was up somewhere around 7%, close to that 20 lakh crore market cap, seeing some bit of selling pressure this morning. But what's your assessment of the stock? 3,000, that looks pretty much done and dusted, isn't it?
I think this is a classic case in understanding how money is made in equity markets. You could stay invested for, an entire year, and perhaps, the last 5-7 days when you step out of the market, given your patience probably worn out, the markets will do its thing. So this is exactly, a case in point. We've always maintained a buy on Reliance no matter what the level was, right? I mean, it did seem like a buying on dips kind of an opportunity every time, we got that dip. Just kind, the market, the stock, and, God has been kind to perhaps, validate that view. After yesterday's move, I still think Reliance is a buy, but if you're looking at it from a near-term perspective, give it time. Probably, a little dip towards 2,800 or probably a little below that also might turn out to be a favorable buy from a risk-reward standpoint. 3,000 done and dusted, you're right. Perhaps 3,150, 3,200 are the levels that we should look at, in the near term. And 2,700, 2,750 are a good support zone for the stock. So even close to those levels, I don't think, getting into this stock should be a bad idea. So for me, Reliance is a clear buy on dips, at the moment.
Okay, Kush, still a buy on Reliance, but what do you advise? What are your picks for the investors today?
So a couple of them, the ones that we had, today morning as a part of our advisory service, Shriram Finance and BLS International. Now, incidentally, both the stocks have hit their first target. So for Shriram Finance, the targets were 2460 and 2525. Since the first target was hit, now our suggestion would be to hold on to this for a target of 2525, which is the second one. BLS International 2, 410 and 418, were the targets. The first target was hit. Now the second target comes into play. So the advice would be to, be in this stock or perhaps initiate a fresh buy with a target of 418. So Shriram Finance and BLS International are the two stocks that, we've recommended as a part of our advisory service also.
All right, Kush, and before we let you go, considering that volatility is elevated in the markets, what would be your advice for traders, the key do's and don'ts for budget day?
I think that's an excellent question. I'm so glad that you actually brought it up. Incidentally, if you see, the markets were up yesterday and so was the VIX. Now, a very simple example of that, which you already answered, is that, it's an event-led rise in the VIX. What usually happens is that, a lot of option buyers, especially the ones who come new to the market, will think that it's a big day, it's a big event, which, it might turn out to be. But they would perhaps think of a strategy like a long straddle or a long triangle, thinking either way the market goes, they'll still make money. But that's, the market's actually moved on from that, matured quite a lot. My sincere suggestion would be avoid buying options, from the perspective of the budget. Even if someone wants to do that, they should do it on an intraday basis, or perhaps implement such strategies once the budget is over and the VIX has cooled off. This will be a good opportunity for option sellers to pocket some money. But we don't usually recommend option selling strategies on air, because we all know it's a bit of a risky play, and the ones who've not probably dealt quite fairly in it might end up losing a lot more. So it's not a recommendation to sell options. It's just to say that this high VIX will play fairly in the hands of option sellers. So buyers should avoid buying options from the perspective of the budget. Play it intraday or play it after the event is over. And from a view perspective on the stock and the sectors, we think power, infrastructure, these are the stocks that could perhaps do well. So if someone wants to play, remain in these names.
All right, avoid buying options, and power infrastructure looks attractive on the budget day from a budget perspective. That's a view from Kush Bora. Thank you, sir. Thank you for joining us here on News 9.
Always a pleasure. Have a great day.
But before we wrap things up, we are witnessing a bounce in the market, and we were just talking about how the markets had evaporated all those early morning gains, but we have bounced back from that 21,700 levels. We did see a slight dip below that. The day's low on Nifty sits at around 21,689 as of now, but a good bit of a bounce back from around that 21,700 zone. We are in fact back above that 21,750 mark on Nifty. Sensex is trading flattish with a negative bias, down 0.03%. It's also building onto the early morning momentum and closing in on the 72,000 levels. We are just about 106 points shy of it. The small cap and the mid cap indices, now they are holding on to the morning gains. The small cap index is holding above the 48,000 level, and the small cap index is actually at a record high. It's above the 15,700 mark, and the mid cap index, that's up 0.32% above the 48,000 level. But with that, it's a wrap on this edition of First Take. But stay tuned with us, as we'll be right back with Business Plus.